Hey everybody, Darren here. Today I'm going to go over two things that are happening in the marketplace right now and have happened, since COVID that have made this an unprecedented time to refinance and get into a better mortgage. So actually, before I jump into that, this always comes up, and that is, hey Darren, when should I refinance? And it's really, really simple. The answer to that question is whenever you can get a better situation than what you have right now. That's really it. It really comes down to that. We always want to take a mortgage and go from a wherever you're at right now and make it better. And whatever the definition of better is up to you. It kind of depends on what your long-term and short-term goals are. But that's always the point. So whenever you're going to a situation that's better, you can refinance, as much as you want, and it would make sense. So really, that's it. I mean, sorry, that's kind of not too specific, but should help you, how do you get to a better situation? Okay, so speaking of that, so two things that are happening in the market and have happened in this last year. Number one, you've probably heard, is low rates, record low rates, right? And that's the number one trigger for people to consider refinancing. Hey, can I get a better rate? So it goes back to that question, can I get a better situation than I have currently? And if that's the case, low rates will often trigger that. But that's not the whole story, right? The second one is record high home values. So home equity right now is through the roof. And why does that matter? I don't know if you can see this. Let's just make sure. So if this represents your house, the more money you borrow against the value of the house, the more of a risk it becomes to the lender, right? So if someone were to borrow all the money that their home is worth, and then foreclose, then all of a sudden the lender's got a problem on their hands where they may not be able to get all the money back out of the house if they end up foreclosing. And that's actually what happened. I don't know if you can remember clear back to 2006, 7, 8, 9, that range, all of us that remember that. What was happening is home values dropped below what was owed, and everybody, and a lot of people are upside down. So the banks were losing a lot of money in foreclosures. So banks really like to have a lot of room here, a lot of room in equity, and lend against the value of the house, but that keeps them in a safe spot. Because let's say, for example, that you only borrow 50% of what you owe on a house. Well, that 50%, that would make it really unlikely or much less motivating to just walk away from a house and foreclose. I mean, because you'd have 50% equity, you'd probably just sell it to get to, if you ran into trouble, right? So these lower loan to values are very, very, motivating for a lender and are much less risky. So what they do is they will oftentimes give better pricing the lower the loan to value. So the more room you have up here, then the more options that you have and the better pricing that you get. Also, as far as this goes, this also gives room to borrow a little bit of cash out if you need it to get ahead too. So you could potentially kind of get your cake and eat it too, where say if you bought a home 2 or 3 years ago, you might have a lot of equity that you didn't plan on. And so if you raise your loan balance just slightly and get a better rate, then that might give you an opportunity to get cash, a lower rate, and get ahead financially on your whatever your financial goals are, but also still keep this area right here pretty free and open, so your loan to value still stays really, really good, and that will keep you in a good spot for pricing. It'll also keep you in a good spot down the road if something does happen, you need to sell your house or make a big emergency move like that, then you've got plenty of room. So those two things right now, totally unprecedented. We've been in, Eric and I have been doing this business for over 20 years, and this is the best scenario we've ever seen. So here's what I want you to do. Go to sweetmortgagedeals.com. There's a little place to opt in. Just opt in if you want to run some numbers, or if you want to just get market updates, you'll get market updates. One of those two things, you'll have the opportunity. If you opt in, we'll book a call with you with either Nate or Corey, myself or Eric, and we'll take 20 minutes and walk through your scenario to see if we can't take what you've got right now and make it better. So sweetmortgagedeals.com. Thanks so much.